Hello, everyone, and welcome to Echelon's Cannabis Conference. We're just going to get started in a few minutes here, just going to allow some more people to dial in. So just 1 or 2 more minutes. Thank you. Get started. Peter, do you want to kick things off for us?
Absolutely, Andrew. I'll start away. So good afternoon, everyone. I would like to thank you all for joining us today at the Echelon Capital Markets Canadian Cannabis Retailers Virtual Conference. I'm Peter Graham, Managing Director, Investment Banking, and I head up the Cannabis Investment and Banking Initiatives at Echelon. This is Echelon's second virtual cannabis conference to take place during the COVID era, with our first occurring on August 25th, 2020, that conference being focused on the US cannabis operators. I only mention this because since we hosted that conference and highlighted what we believed was a phenomenal opportunity in the US cannabis space, an equal weight holding of the Echelon US cannabis research coverage universe would be up over 140%. So suffice to say, we have high expectations and a high bar for the phenomenal companies we have joining us today and what their future holds. Echelon has been actively involved across capital raising and advisory for the Canadian cannabis retailers for the past several years, working with some of the presenting companies since they were only a concept. It was and still remains to this day our view that these retailers are the best way to play the Canadian cannabis market, given the challenges for producers to differentiate their products and brands to consumers, and the retailers truly owning that all-important customer experience. We are fortunate to have gathered many of the leading companies today to share their corporate vision, industry insights, and how they expect catalysts may shape their futures. I want to thank our presenting companies, Inner Spirit, Fire and Flower, and Alimentage Couche-Tard, Superette, and Chiaro. And obviously, thank you for joining us today. I think I can safely speak for all of those who have joined in through Zoom and through our YouTube live stream that we look forward to hearing your insights and perspectives over the next couple of hours. I'd also like to take a moment to acknowledge that on January 15th, 2021, Andrew Semple, the moderator for today's conference and Echelon's research analyst covering the cannabis space, was awarded Canada's best performing analyst of 2020 by the Globe and Mail. So with that, and at this time, I'll turn it over to Andrew Semple to provide a deeper dive on our Canadian cannabis retail thesis, review the format of today's conference, and introduce our first presenter. Andrew, over to you.
Thank you so much, Peter, and great introduction. Good afternoon, everyone, and welcome to Echelon's Canadian Cannabis Retailer Conference. I'm excited to be your moderator for today. The Canadian cannabis retailers are a central theme of our cannabis research coverage. The retail vertical is incredibly important to the success of the Canadian cannabis industry, providing consumers with a means to access legal cannabis and encouraging consumers to choose legal cannabis products instead of illicit products. The development of new retail stores is critical to the success of the entire cannabis industry supply chain, with many examples of how new store openings have driven higher sales growth in key provincial markets. We believe the Canadian cannabis retailers also present an attractive investment opportunity. In a country with immense upstream production capacity and cannabis advertising restrictions, the retailers are well positioned to own the customer relationship and maximize the value of shelf space. We believe these imbalances provide retailers with a long-term strategic edge. Shares of cannabis retailers also trade at a far more reasonable valuation than the upstream producers, with market capitalizations a fraction of what we see for the Canadian LPs. The largest retailers trade at market capitalizations in the hundreds of millions compared to large cap upstream LPs that have market capitalizations in the billions or even sometimes in the tens of billions. Clearly, there's a disconnect. Finally, these retailers have already proven their business models. These companies are EBITDA profitable today, and a steep growth trajectory ahead bodes well for future financial performance. With that said, Echelon is very pleased to welcome Fire and Flower, Alimentation Couche-Tard, Inner Spirit Holdings, Superette, and Chiaro to present with us today. I believe we will all benefit from learning more about these important leading operators in the Canadian cannabis retail industry. A few housekeeping items before we get started. At the beginning of each 30-minute time slot, I will provide a brief overview on the company and introduce the presenter. The presenter will then provide a 15 to 20-minute corporate overview presentation, followed by a Q&A session. I will moderate the Q&A. We look forward to having the audience submit questions through the Q&A function on the Zoom platform. Questions can also be submitted through the concurrent YouTube live stream. We'll pause now for just a moment as we queue up our next presenter. I'd like to introduce our first presenter today, Darren Bondar, founder, CEO, and president of Inner Spirit Holdings. Inner Spirit Holdings has taken a unique approach to cannabis retail, having utilized a mix of franchise and corporate-owned stores to rapidly expand its store brand, Spirit Leaf, across the nation. Just this week, the company opened its 75th branded Spirit Leaf location in Canada, a milestone achievement. Last quarter, the company also recorded positive EBITDA. So without further ado, I'd like to turn the call over to Darren to tell us more about Inner Spirit Holdings. Darren, please go ahead.
Thanks, Andrew, and hi, everybody. Thanks definitely to Echelon for being such a great supporter of cannabis retail, and really thrilled to present our company. What we've accomplished really in a matter of 3 years is truly incredible. And I think we've developed what is really a world-class corporate culture driven by cannabis enthusiasts and local entrepreneurs, where everyone really takes responsibility for the success of the entire company. And it's a corporate culture that promotes diversity, equity, and inclusion. And our ethos and manifesto really are embedded in everything we do and embody the Spirit Leaf brand. And we built our company on people. We're differentiated, we're remarkable, we've got purpose, we're courageous, we listen to our customers, support our communities, we co-create, we congregate, and we promote personal freedom. I want to share with you our manifesto, as ultimately, as I say, it embodies everything we do, and you have to really see it to understand how great this company is. So I'm going to ask Echelon to take the screen back for a minute and play the video, and I'll be back in 90 seconds. Where there is smoke, there is fire. Where there is fire, there is a deep passion to share our joy and knowledge of cannabis within the communities we live. There is no one more informed, more dedicated, or more willing than we are to educate, support, and inspire the people and the populations we serve. We harness our collective energy to create a beloved brand because this is our labor of love. We know where we come from, and our authenticity extends from the motivation of the people who have come before us, the pioneers behind the counterculture roots of the cannabis movement. We are anchored by our history and the practice of using the cannabis plant as a channel for creativity, tranquility, introspection, and sociability. We pledge to absorb and honor our cultural traditions and continue the legacy of elevating our inner spirits. We grow when our communities flourish, so it is our duty to cultivate deep connections with our consumers and our partners through understanding and continual engagement. We respect each individual's reason for choosing cannabis as a way of enhancing their quality of life. Social, therapeutic, and spiritual journeys are all welcome here. We know where we are going. We are trailblazers leading the charge in a brand new industry. We believe in connecting people in a world which is deeply divided. We believe that everyone matters equally, regardless of status, age, ethnicity, or creed. We aim to foster true community spirit through what we stand for, who we serve, and the products we provide. We can imagine a world full of peace, love, and harmony. We are Spirit Leaf. Awesome. Thanks everybody for listening there for 90 seconds. And now I'm going to go to the next slide, I believe. Great. So to give you an idea of where we are and how we're positioned today, we are Canada's leading single brand retail network across the country from coast to coast. We've applied what I think is a very successful retail and franchise and branding model to the industry. We surpassed 70 stores this year already, with a 75th store set to open this week in St. Catharines, Ontario. And in 2020, we're surpassed $100 million in system-wide sales and are well on our way to having over 100 stores open in this fiscal year. And also incredibly, we served over 2.3 million customers last year. So we're getting huge engagement from guests across the country. And we have over 200,000 members in our collective program. In fact, we're just about to hit 210,000 members. So that gives you kind of a quick indication of where we're at today. From an investment perspective, there's 6 things I'm going to touch on in the presentation. Number 1, I'm going to show the size of the market, which most of you are likely familiar with. I'm going to talk about the benefits of the franchise model and how we're profitable by using the franchise model. Obviously going to talk about how we've been effective in opening 75 plus stores across the country. We're very excited and passionate about our retail experience. Retail today is really an omni-channel industry. And I'm going to show you how we effectively execute at retail. We have the most incredible team that's working on this and is so passionate. We actually have over 700 employees now across the entire country amongst our network. And we've got some of the great strategic partnerships with some of the industry-leading brands. The Canadian market, as we saw in 2020, was estimated to be $2.5 billion. And Stats Canada hasn't put out the December numbers yet, but my estimate is it'll actually be 2.6 billion, slightly higher than the original estimates, and extrapolate to grow to 4.1 billion in 2021. The US market, which is also growing in size and lots of MSOs have been making great progress, is going to have huge traction over the next number of years. And franchising, internationally, Mexico and Israel are also about to come on board. Franchising has proven by other industries and other companies to be a very effective way to penetrate these markets. In fact, in the US, franchising, I believe there's an estimate of about 1 million established franchise businesses generating over $1 trillion worth of business a year. So franchising is not new, but it is certainly new to the franchise, to the cannabis business. Our strategy really from day one to penetrate this market and to be effective has really been to build an iconic brand. We knew that the entire country and the entire world was watching Canada to be the first G7 country to legalize cannabis. And we wanted to do it right. We wanted to be classy. We wanted it to be educational, and we wanted it to be responsible. And we want to do that by developing a brand. We're a one brand company with one focus, and Spirit Leaf is really gaining quite notoriety and some great traction. And then from that brand, we really wanted to represent all the amazing licensed producers who we've been hearing about and reading about for the last number of years, to sell their products and tell their stories and showcase all the talented growers in our stores and provide education to our customers and show all the different formats that would be available and why cannabis has so much power and can just be such a great, can just have such great benefits. And then also, we want to use what we call a low capex franchise model. And we felt right from the get-go that we would just be a lot more effective with an entire team of franchise partners. I don't like the word franchisee. We call them our partners. As we knew, operating from coast to coast in 5 different provinces, seemed to be 6, would be quite challenging from a pure corporate perspective. So we launched our franchise model and also operate corporate stores, which really have worked beautifully together and quite harmoniously. Just to give you an idea from our franchise perspective, we had 43 stores open last year for the full year, and their average sales for our franchise partners was $1.8 million. And from a sales to investment ratio, which is a common metric used in the franchise industry, that represented a 360% return. Whereas a typical quick service franchise is pretty happy with 150%. So our franchise partners are extremely happy with the results that they've achieved. And we've just been inundated with franchise applications. We've received thousands. And today we have 62 franchise groups operating stores across the country. And they themselves have invested almost $50 million into their own stores. So that's kind of the benefit of the low capex model, is that we don't have to necessarily dilute our shareholders to gain additional market traction and market share. Just to give you a quick background and back it up a little bit, we started in 2017, about 18 months before federal legalization. And we started the brand development right out of the gate, attending industry trade shows. And then we were the first company, and I believe we're still the only retail cannabis company in Canada to be granted membership to the Canadian Franchise Association, which really gave us a great reputation and the reputability to sell all of these franchises and to promote our concept. And from that time in 2017 until 2018, before legalization even happened, we had over 100 franchises ready to go and be able to build the stores and execute effectively. We unveiled our store design, which you saw some in the video, which has been really well received. And we actually were the first recreational retail cannabis company to do a true IPO, which we did and started trading on the CSE in August 1st, 2018. And throughout that, we also started teaming up with some of the industry giants like Auxly and Tilray and Hexo. And we have a cross collaboration with High Times Magazine. And then October 1st, 2018 came and stores started to open. So we got our first 4 stores open in 2018. And really since then, 2019 and 2020, we've been opening corporate stores and franchise stores right across the country. And just to give you an idea of where we still think there's a lot of growth, in Alberta, there's about 1 store now for every 8,000 people, whereas in Ontario, it's still 1 for every 45,000. So as we continue to open stores, we really think that that Ontario is going to be a great market for us, and I'll discuss that in a couple minutes. So here's our heat map. We're currently operating 74 stores in strategic locations in 47 cities, 5 provinces, coast to coast across the Canada, with over 100 expected to be open in 2021, which also includes increasing our corporate store count. Just to give you a few highlights, I mean, this is all done organically. We've never, every single one of these stores has been done organically. We have an incredible real estate team, custom mapping software that allows us to identify opportunities across the country and really secure some of the premier locations to become available. A few highlights that I'd just like to mention. In British Columbia, we're actually the only national retailer with multiple stores throughout the Okanagan Valley, with 4 stores in Penticton and Vernon and a couple in Kelowna. And then also in Alberta, which is our home base and which was the first province to really have an open licensing system that followed their liquor model. We've obviously got great coverage all the way from the south of Lethbridge to the north of Cold Lake. Lots of stores in Calgary and Edmonton and everywhere in between. But I think something else that's really cool is that we're actually the only retailer that has stores in both Banff and Jasper National Park, which collectively receive over 6.5 million visitors per year. So we've really done a great job in covering Alberta and have some future opportunity to grow. Saskatchewan also started by lottery. And we've had a store open there since day one in Moose Jaw, which is a franchise location, but it's proven to be really an awesome province to retail in. So we have 3 stores, corporate stores in Saskatoon ready to go. The first one will be open next month with a couple right behind in really premier real estate locations in Saskatchewan. And then Manitoba also opened up licensing recently. And we've got 4 stores ready to go in Manitoba, which we expect will open in spring, summer, a couple corporate stores and a couple franchise stores. Now, we've been preparing for Ontario really since the beginning. We've had a Toronto office. We've secured a number of leases there since day one. And we were actually the first national retail brand on April 1st, 2019, to be able to open a store. And it was really open to great fanfare. We had, it was in Kingston, and we had an early collaboration with the Tragically Hip. We used Kingston royalty. So we've just gotten so much goodwill and love our Ontario customers. We're currently operating 21 stores, or the 21st store is about to open this week, with a concrete plan to over 40 by the end of the year. And then also we're one of only 2 national retail brands in Newfoundland. So we have a terrific partner there who's vertically integrated with a grow facility. And we actually have 4 stores open now, St. John's and Gander. And our 5th store is about to open probably spring, summer. And Newfoundland, we're allowed to do a drive-through. So drive-through cannabis is kind of a new concept, but in Canada anyway, and we're looking forward to seeing how that goes. So that's our, our footprint right now as it exists in Canada. The next thing I just want to show you is our retail brand. And as I mentioned, we're an omni-channel retailer, and we really take a lot of pride in everything we do. The space, as you saw some from the videos, is really, it celebrates Canada, from the country's unique spirit to its storied landscape. Within the confines of these walls, we really want new communities to be formed, and really everyone is welcome. And, it's not only about design, it's also about functionality. Our floors, are distressed vinyl plank, but not only for aesthetics, but also because the materials provide harsh durability during the Canadian winter. So we've thought about really every element of the retail store. We've got photos, murals, utilitarian items, just to provide a really cool and differentiated shopping experience that's welcome and appreciated by not only legacy consumers, but new consumers like your soccer parent or your senior, who really feel welcome in our store. I've talked about the brand, and behind that brand is 700 passionate cannabis enthusiasts and employees who are well educated and trained. We have a customized app where every employee has it in their phone and in their pocket, so they're able to stay up to date on the latest trends and the latest news, and really be effective in educating your consumers on responsible use. And I talked about the franchise model. One thing I'd like to highlight is it's really an independent business into itself. But our franchise satisfaction is high. We were actually provided with a Franchise Choice Designation Award in 2020, which is a huge honor to receive from our franchise partners, and an endorsement from the franchise community that says, we're doing a good job. Our marketing is something we're really passionate about. And I think the Globe and Mail famously was quoted in saying, no excitement, no glamour, no fun in marketing. And our creative director actually said in a podcast the other day that I actually think it's made us be more creative and, in fact, be more effective. We were awarded a 2020 Platinum Markham Award for one of the campaigns we did in the summer. And what we have coming down the pipeline for 2021 is just going to it's going to floor people at how creative we can be outside of traditional marketing norms. We've got an extensive product portfolio. And now there's over 1,000 products available across Canada to be able to sell, which allows us to differentiate. We've also just recently announced our own custom brand called Spirit Leaf Origins, which again will allow us to differentiate. And Cannabis 2.0 is really just it's a new format. It hasn't even been available in Canada for a year. So we're talking about edibles and beverages and chocolates and lozenges and bath salts. And while we're still seeing about 65% of our consumers buy flower, in more traditional markets, it kind of moves to 50-50. So we still think there's a lot of growth, particularly driven around the Cannabis 2.0 market. And we have an incredible selection on already, and it's going to continue to grow. We talk a little bit about our loyalty program. I believe we're the biggest in the country, and it doesn't matter in size necessarily, but we have 210,000 advocates and fans that shop with us. Every time they leave our store, they get an automated text that they receive a point for, and then they're able to redeem those points for merchandise. So we have hundreds of thousands of people across the country wearing Spirit Leaf hats and swag and shirts, and just like really loyal, great fans. They tend to spend more on average in our stores than customers who aren't members of loyalty. And we've really built a deep connection with them. And we're able to provide a local level, like information on product drops and access to promotions, which has really made this a very effective form of marketing for us. But, don't just believe me. We do have a premium store experience, and our guests are being such great advocates and telling us how much they love us and sometimes how much they don't. But there was an independent research done, and we actually have the highest Google ratings of any other national retailer in the country. I encourage you to go, Google, if you're on your computer, Spirit Leaf Scarborough or Spirit Leaf Masonville. Let the customers speak. Obviously, as CEO, I'm going to tell you we're the best, but our customers are really being great fans and great advocate for us. Now, as we've gone into COVID and as an omni-channel retailer, we've really had to shift. But incredibly, we have this terrific technology and infrastructure behind us, which has just allowed for omni-channel retail. So we have delivery, we've got e-commerce in provinces where it allows, and our customers can really buy from a variety of different methods. And we have 75 live menus across the country. And the technology is really just incredible. In Ontario and Saskatchewan, we are doing delivery right now. And literally, we have the most sophisticated and awesome Uber delivery integration that we've collaborated with that makes it super slick, and our customers are really enjoying it. And we hope delivery is something that expands across the country as the months and years go ahead. And also, just in terms of name recognition, we have incredible media presence. In 2020, we had over 600 stories, 25% more than our nearest competitor. Year to date, we've actually received almost 1,800 stories have been written about us, with print circulation over 11.5 million. So we're really doing a great job. People are loving what we're doing. They love local ownership, and that's really helped us build that strong brand recognition. And of course, in addition to our people, we also recognize the importance of data, and we did a collaboration with Headset Nielsen. And what that allows us to do is just ensure we have the right product in the right stores at the right time. And another benefit to that for our franchise partners is they've got the visibility of 75 stores to be able to compare data against and buy from. But then because they're local, they're able to really target and hone down on what their local customers want a lot more than if we were just trying to buy for 75 stores from a corporate office. So the market intelligence program has been fantastic and also provides additional revenue streams for us. So how does that result in sales? Well, our operating performance, this is our system-wide sales, which is often misunderstood, but system-wide sales shows our overall market penetration and what we're doing as a company as a whole. So as you can see, we've had 12 consecutive months of system-wide sales growth. In December, all of our stores that were open for a full year actually had same-store sales growth. So this isn't just adding on new stores. This is also us becoming better retailers, more consumers shopping instead of the illegal market to the legal market, and more adoption. And I would also add that our market share has also grown for 11 consecutive months based on Stats Canada. We're looking forward to seeing December. But we're started at about 3.5% in January. And in November, we were at 4.38% of the entire Canadian market, which I think is really just an incredible achievement. So how does that translate into revenue and profitability? We haven't released our Q4 yet, but we have released some numbers. We've been profitable in Q2 and Q3 and are looking forward to putting out Q4. But as you can see, the franchise model is really effective. And I guess, in terms of profitability, a good comparison for all those investors to look at out there is, a similar competitor in the US. MedMen actually did about 35 million in retail sales in their last quarter reported, but they lost $11 million. So I know MedMen's a bit of an anomaly, but it just goes to show you that a franchise system, despite it maybe not having as sexy as top line revenue, can actually be extremely profitable. This wasn't done alone. Obviously, we have the most incredible team. This is not a new team that's been developed. We've been working together, some of us for 15 to 20 years in our legacy business. We're really true cannabis enthusiasts and really take a lot of pride in everything that we do. This is a hardworking team and efficient. We're lean, and I couldn't be more proud of the executive and all the support center. And really, it extends to my earlier point where we have 700 employees across the country who I really believe are bought into the success of the whole company, not just their store. And then finally, our board of directors. We've been very fortunate to have such a great representation and board of directors. Newly appointed this year is Canada's own resident dragon, Manjeet Minhas, who's obviously got great experience as an entrepreneur and also private label, and has just been a terrific addition. Russ Wilson also joined our board when his firm, Prairie Merchant, founded by his dad, Brett Wilson, invested earlier in 2019. And Russ has just a great wide variety of experience in the cannabis space as a whole. Andrew McMillan is the Auxly representative on our board and was the former PEI of a CEO of PEI Cannabis, so he's got great experience. David Margolis was one of the original guys in Alcanna and Liquor Depot and on their board. So we really have strong corporate governance. And we added Frank Rochon as a director this year, who's the former chairman of Deloitte with an impressive career and lots of M&A experience. So we've been supported by our board of directors, and our corporate culture really extends from top to bottom and bottom to top. And then finally, our strategic partners have really been terrific, and we collaborate with them in a number of different ways. Auxly is one of our largest shareholders, Hexo, we've got Tilray and High Park in there, and Prairie Merchant, who helped us be able to open corporate stores in Ontario. And then High Times, we did this very cool collaboration with them where we actually have the right to display High Times magazines across the country. We have the largest High Times magazine collection in Canada, actually, with the original 4 editions in our office. But what High Times did is it really gave us that legitimacy. It was important to us that the legacy consumer would buy into Spirit Leaf, and that collaboration will continue and increase over time. So that's the thesis of what we were doing and how we did it. We've obviously proven our ability to open stores across Canada. We believe that our franchise system will translate well to international markets. We've got over 70 stores already operating. We're already profitable. We're operating, as I said, in 47 cities in strategic, high volume, high profile locations. And we're going to continue to expand. We still see some great opportunity in Canada, and of course have our eye onto some of the international markets. This is not my first rodeo. I've got over 20 years of experience. I'm passionate about franchising and retail and supporting entrepreneurs and cannabis. So it's like kind of the perfect marriage. And I think a lot of my close contemporaries would say if there's anybody who should be a CEO of a retail cannabis company, I was probably the guy. So it's been really awesome to get so much support from everybody around us. And our key strategic partners really allow us to have a fully integrated business model and some really strong bench strength. Give you an idea about our cap table, because I know that's why everybody is here. I would say our top 6 shareholders own approximately 40%, and I'll let Andrew speak to it, but we think there's a lot of great opportunity. And when people start to realize, and I hope you understand today from the strength and the power of the franchise system, how there's a bit of a disconnect. So I'll let Andrew and the pros speak to that. And I guess there's the disclaimer, and over to Q&A.
That was a great overview, Darren. Thank you so much for that. Lots to pick away at there. We got a lot of questions from the audience in the Zoom function and on my email. So I'll try to pick away at some of these. First one, I do want to lob in one myself to get us started. I do understand that there's a very robust pipeline for applications for potential partners looking to work with you on a Spirit Leaf franchise. Why, in your view, is there so much demand for the franchise model you offer? And how will that continue to drive your business forward over the coming years?
Yeah. Well, when you look back to 2017 and 2018, people were really looking for a way to be able to access the cannabis market, and becoming a licensed producer was not very accessible. It was expensive and complicated. And retail really offered a great avenue. Retail is something people understand. But at the same time, it was also complicated to get in. There's high barriers to entry. The application fees or the application process across the country is quite challenging. And entrepreneurs sometimes just want to, some entrepreneurs want to go it alone, which is totally cool. But other entrepreneurs want to be some part of something bigger. And in my legacy business, which was the watch business, we'd be happy if we get like 3 or 4 applications a month. But the applications continue to stream. So we've really just had the opportunity to choose from incredible people who want to be part of the cannabis business and we want to be part of Spirit Leaf. And going forward, I expect in international markets, there just to be a very healthy pipeline if and when those opportunities present.
That's great color. We got another audience question actually several audience questions looking at the near-term and long-term corporate and franchise partner mix. So looking at 2021, what should we expect in terms of corporate and franchise store openings and the mix between those? And in the long term, what do you feel is the kind of ideal mix between corporate and franchise for Spirit Leaf?
It's a great question. So with our 75 stores, we're currently operating 15 corporate stores and 60 franchise partners. I anticipate through the end of this year, it'll be about 25 corporate stores and the rest will be franchise partners. I think that 25% corporate store and 75% franchise mix seems to be healthy and quite manageable for us. It's a little bit opportunistic. It's a little bit where we haven't necessarily sold a territory that drives our decision to do a corporate store versus a franchise store. But the corporate stores also provide this great infrastructure for us to be able to support our franchise partners right across the country. And we know our shareholders like top line revenue. So we are as much focused on developing our corporate store business as we are on also developing our franchise store business. And but there's no way we would have achieved 75 stores. And if you look at our peers, those who've gotten close to us in terms of store count were as a result of mergers of multiple brands. So really a big credence to the franchise business for allowing us to be the largest single brand retailer in the country.
That's great. And when you look ahead to the Canadian cannabis market, how many years of runway do you see for supernormal growth ahead before we start hitting a more mature phase for the industry? And once we start to enter that mature phase, how do you continue to grow beyond that?
Yeah, another good question. So 2020, I believe that we're still going to have quite a good runway through 2022. I don't need to remind everybody, but we've been operating in abnormal times since day one. I mean, from supply problems to licensing delays to provincial governments changing their mind on how things are going to roll out. So I don't even think we've been operating as a normal retail business yet. Every step of the way, it's been difficult. But as COVID starts to end and as we emerge out of this, people are going to kind of wake up and go, oh my God, there's 100 Spirit Leaf stores across the country. And so I think we can continue to have quite aggressive hyper growth in Canada through 2022. And then post 2022, I've said this from day one, it's been our mantra. All of the foundational things that we've put in to our brand are going to help us over and above the rest of the competition. We know people like brands. We know people like shopping local, which is the benefit of our franchise model. And then also just on a macro level for cannabis retail, we still only have about 25% adoption in cannabis, whereas in alcohol, it's like 80% adoption. So I still think there's a huge runway, maybe not as hyper growth, but I still think there's going to be consistent growth in mature markets like Colorado and Washington State. I mean, they're on 7 consecutive years of growth. So I still think we're kind of at the mid stage, maybe rounding second base, but there's still a lot of excitement ahead for us and retailers.
That's awesome. Great response. Getting quite a few questions about the US. So I'm going to ask yourself, You've proven yourself as a Canadian retailer and a Canadian brand of cannabis. We do have this large market opportunity to the south of us. Um, would you look at taking Inner Spirit into the US cannabis market? And if so, what do you think is the best approach to be able to do that?
Yeah. Well, the US still has a long way to go towards federal legalization. I'd be quite shocked if it happens in 2021. Also, you've seen a lot of Canadian retailers and brands enter the US market who have not necessarily been successful, but you've also seen other Canadian retailers be extremely successful. So we've taken some initial steps. We're certainly conscious of the US market. We've got plans, and I look forward to sharing them in due course. But right now, it's federally illegal, so it makes it very difficult for all of us to cross border. Having said that, the franchise model, we believe, is going to be an effective way to get there in certain states that don't require vertical integration. So yes, the US and Mexico and Israel, who are the next up for cannabis and international retail legalization, are markets that we're interested in. The US is obviously something we're interested in, and we've taken some great first steps to hopefully bring that to reality.
That's great. I did want to ask about something you brought up in the presentation. You teased us about some marketing initiatives coming up in 2021. If you had anything that you could share on that, that would be great. If not, we would love to hear more about your private label brand that you are launching and how that will roll out across the nation.
Sure. Well, I've got some competitors on the call, so my marketing team would certainly get really upset if I did it. But let me give you a bit of a snapshot in terms of where our heads are at and where my head is at in terms of marketing. Every year, and this has really been a big part of my training and how we learn to connect with our customers. But every year, we participate in what's called the Gathering, which is a Forbes top-rated business summit and really a masterclass for brand and business leaders. I'm taking the stage for a second year this year to present amongst business leaders and brand leaders from like Netflix and Budweiser, Shopify, Herschel, Amazon, Skip the Dishes, and other top brands. And it just allows us kind of to share our secrets a little bit and our knowledge on branding and marketing and building corporate culture and connecting with our customers. And that's really that, and our manifesto is really behind everything we do and how we think about branding and marketing.
And last question from our end before we have to turn the call over. Darren, please tell us what catalysts to look forward to in 2021. What should investors, what should consumers who follow the Inner Spirit story, what should we look forward to in the next year?
Well, I think firstly, we only had 43 stores open last year for the entire year. So we started the year with 68 stores. And we're at 75 as of this week. With a clear plan to 100. So we're going to continue to open stores in communities across the country. We're going to continue to educate and inspire our customers and help new users adopt and legacy customers come into the legal market. So I think there's enough natural catalysts that we've already put out there for it to be an extraordinarily exciting year for Inner Spirit and Spirit Leaf and our franchise partners and employees. And then the additional catalysts on top of that, I mean, they're coming, and we've got a lot of great things in the pipeline, some collaborations with other retailers and industry partners that we're looking forward to sharing and just continue to build on the base that we've done and showing everybody what an incredible company this truly is as a single brand Spirit Leaf focused retailer that is built on people.
That's a great overview of the company. Thank you so much, Darren, for joining us today. You did an excellent job of handling questions, great insights into the business. And we look forward to seeing how operations play out in 2021. So thank you.
Thanks a lot, Andrew. Thanks, Echelon. And thanks everybody for taking the time to hear our story.
Thank you. Thank you also to the audience members who have been very active. I know I didn't get to every question, but thank you very much. Pause just a moment as we queue up our next presenter. It is my pleasure to introduce our second presenter of the day and two very special guests. First, I'd like to welcome Trevor Fenkot, founder and CEO of Fire and Flower Holdings. Trevor has been a visionary for the Canadian cannabis retail industry, who very early on identified the cannabis retail opportunity. He has guided Fire and Flower from inception to the current position as the largest corporate-owned retail store network in Canada, with more than 75 corporate-owned dispensaries. Trevor has also prepared Fire and Flower for the next stage of cannabis retail, having acquired and developed a comprehensive digital Hi-Fire platform, which positions Fire and Flower as a leading cannabis retailer in terms of delivering an immersive, digitally enabled retail 2.0 experience. I'd also like to welcome to the call today, Stéphane Trudel, a director of Fire and Flower and also SVP of operations at Alimentation Couche-Tard. Stéphane, we look forward to hearing your unique insights on how Fire and Flower and Couche-Tard can continue to work strategically together to unlock value for shareholders. With that, I'd like to turn the call over to Trevor. You may begin.
Thanks so much, Andrew. Thanks for having us here. And I'm very excited to be able to talk today, but also to have Stéphane Trudel with me. As you mentioned, he's not only the SVP of operations at Alimentation Couche-Tard, Circle K, our strategic investor and partner, but also a member of our board. So what I'm going to do today is actually do a bit of a page flip through our deck. We did a recent update, but I want to focus a lot of time on being able to answer questions, because I think a key part of our story is our success through partnership and our strategic partnership. So I want to make sure people have an opportunity to ask not just myself, but also Stéphane about the company and the exciting opportunities that we see in the future. So to kick it off, we are Canada's largest multi-brand cannabis retailer, serving customers across diverse segments. Our origin story really was as a dedicated next-gen retailer. So, we built the company from the ground up to compete when competition was extremely fierce. So we didn't pivot from another space into retail or into cannabis. We took the time to kind of figure out what would we need to do to compete at the highest levels against the apex predators like Amazon, or when competition becomes fierce, how would we be able to manage that? And so we built the company as a tech-forward, a tech-driven next-gen retailer that's in the cannabis space. So our value proposition essentially is that we use our proprietary Hi-Fire digital retail and analytics platform to make sure that our customers are fully engaged. And we have two groups of customers. We view, like most next-gen retailers, we view our customer groups as the people that come into our stores, our retail customers, but also our vendor partners as customers as well. Because the role of next-gen retailers is to effectively service your customers most effectively by getting deep engagement with them, anticipating, understanding their needs, and providing innovative service offerings to them, but also to take that information and take that understanding and help your vendor partners create better products for them, provide different experiences for them that generates ultimately kind of loyalty and almost a twin flywheel type model. So that's really kind of a key part of our value proposition. Digitally engaged customers are more loyal, they spend more in our store, and ultimately have a higher lifetime value, which is key. The platform itself for us delivers high margin recurring subscription revenue in terms of our data and analytics platform. And it actually adds value to our acquisitions by being able to essentially deploy Hi-Fire into new acquisitions when we take them over. So we know that this is going to be a very aggressive growth play, not just in Canada, but in the US and any market that we're going to enter. So for us, a key part of it was building the digital and technological infrastructure so that when we acquire something, we have something to plug in immediately to understand the consumer groups that are coming to that store and make the acquisition more valuable. So the second part of our value prop is really the strategic investment by Alimentation Couche-Tard, which is the owner of Circle K stores. And this will actually fuel a lot of our internal, but also international growth opportunities. And then a strong balance sheet, which is sort of, I think, the table stakes, but it is important to have the necessary capital and expertise to be able to deliver on these very ambitious growth plans. So on this slide, we've got positioned to become a leading cannabis retailer. Again, talks about Hi-Fire, which I want to go into in more detail a little later, but our demonstrated aggressive growth plan. And then, of course, we'll talk about Alimentation Couche-Tard. I want to make sure that I've got this, this PowerPoint under control. Okay. So for our aggressive growth plan, sort of the highlights here, we achieved positive adjusted EBITDA, which is very, very important. And I think as kind of a comment across all the participants in this panel, one of the things that I agree very much with Andrew about is the retail sector is often overlooked. As we talk about the higher upstream participants, like the licensed producers, and of course, having been a licensed producer myself, like this is important, but really, I think we've been overlooked as a sector that has achieved almost broadly positive adjusted EBITDA, more so than our other industry peers in the licensed production space. So it's really important achievement, not just for myself, but for our other panelists as well. We've got 75 plus operating corporately owned retail stores across Canada. It is important to us that we own the store because obviously that allows us to realize the earnings per store more effectively. And it's our view that by having that kind of intimate control and that ability to relate to our customers directly through kind of corporate-owned stores, that's actually an advantage. So again, Hi-Fire for us has been a very, very critical part of our aggressive growth plan. Our Spark Perks membership program has almost positive, actually more than 220,000 people, but it grows at a pretty good clip, probably adding about 2,000 or 3,000 a week. So we expect that growth to continue. And then of course, Open Fields, which is something we haven't talked a lot about as a company. It is the engine, little engine that could in Saskatchewan. It delivers a tremendous amount of top line revenue to us, gives us a very large market share in that market, which is actually the most efficient market in Canada. In the sense that we can do direct deals with licensed producers and leverage some of our scale and the asymmetrical price compression that we're seeing in terms of overproduction. We can also do delivery to customers. We can do full e-commerce, and of course have our own corporately owned retail stores there. So again, very important part of our plan. You can see here as well that we did 85 million in revenue up to Q3. We haven't released our Q4 results, but definitely stay tuned there because we have continued to succeed. And again, one thing that I do want to focus on in this particular presentation is the continued expansion of our relationship with Alimentation Couche-Tard and Circle K. So, I mean, for those of you who haven't heard of Circle K or Alimentation Couche-Tard, they are a very large, multi-billion-dollar market cap company with operations in 16,000 stores in 25 countries. So very, 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 very good at what they do. And of course, we'll go through a little bit of our strong governance and our board of directors, because I do believe that that's going to be one of the themes that we see played out as this next generation of businesses is built in cannabis. Is governance is going to be key. So you can see here that we've got 77 stores across these 4 banners. For us, having multiple banners is an important part of our strategy, because what we realized being a data-driven retailer was, as we looked at our customers and we compared it against the illegal market and entrants, we realized that there's isn't going to be a one-size-fits-all solution to cannabis retail. It's unlikely. We have about 50 archetypes of cannabis customers. Probably 8 to 10 of those are the ones that most retailers are going to focus on in terms of being very high value. But we also know that even our Fire and Flower brand itself indexes heavily to sort of 4 and possibly 5 if we get our marketing really down. But we're not going to hit all 10 of those archetypes. So it is going to be important to offer different experiences to different customers. There isn't a one-size-fits-all approach in our view. And so things like acquiring Friendly Stranger, which is really geared towards cannabis enthusiasts. It's sort of one of the longest, very storied and historical institutions in Canada and in cannabis, 25-year operating history, and things like Hotbox, which again, operating in Toronto's Kensington market is a real sort of iconic landmark. It really kind of speaks to a different consumer. So knowing that we're not going to hit everything with one brand, it was important for us to kind of branch out there. All right, so Hi-Fire platform. Our Hi-Fire platform really is the nuts and bolts, the bones of kind of what we're doing. And one of the earliest things we did, the first acquisition we actually made, was we acquired a technology company, which some people thought was a little odd given that we were trying to be a retailer. But our hypothesis really is that look at the best in breed retailers, the ones that can compete with Amazon, that are thriving in an otherwise kind of very challenging retail market, and figure out what they're doing. And they all viewed themselves as technologically native. They weren't bricks and mortar that sort of bolted on a technology solution or purchased something off the shelf. They really viewed themselves as technically native. So this was very, very important to us. And we use our tech to drive this deep engagement with our retail and vendor customers and increase their value across the supply chain. But two, it provides incremental high margin revenue for us. So you'll notice in our financials, when they come out, we actually have a line for digital revenue. And I think it's, investors should be looking at that line to see that there's sort of cumulative quarter over quarter of growth there, because that's the health of that very high margin revenue subscription-based data business. So, and then the third, and this is probably the most important given all the recent activity in the US with the Democratic clean sweep, is we knew from the beginning that we were going to use this to create sustainable competitive advantage in our operating model that could be leveraged for expansion to international markets. And it didn't always have to be international. We sort of started and we looked at it on a provincial basis, but it's about entering new markets. And our real work here was to get a model, use Canada, just like the licensed producers did one generation back, but use Canada, and in particular for us, Saskatchewan, as a model of what what the optimal operating model is, really hone in on this. And for us, it is kind of this hub and spoke model that's tied together with technology and also offers things like delivery. So it's really wrapping the customer in this experience, but with a hub and spoke type model. So instead of sort of one store fits all, we believe firmly that it's going to take a number of different types of stores and store formats to properly service the market as it evolves. All right, so open fields distribution for us, again, we bet very heavily on Saskatchewan very early on, and are quite happy with that investment because we started from scratch there, built our own warehouse, built our own distribution infrastructure. We have exclusive product agreements with most of the large licensed producers, which we can offer to our customers. So we know that product offering and product differentiation does matter. We see it in Saskatchewan. And again, because we moved so aggressively and so early, we are clearly in the pole position there. And it allows us to even get insight onto, we're selling to third-party retailers as well, the moms and pops. So it gives us a lot of information and a lot of market intelligence in order to grow our business there. So I wanted to bear down a little bit more and talk about the Highfire platform itself. So this not only provides our deep understanding of consumer behavior and the brand preferences, it allows us also again to have an independent high margin revenue stream, which is very important. And again, aggregation value here is as we acquire things, we can put Highfire into it and almost immediately through implementation, understand who the customers that go to that store are, where we might be able to optimize them, where they might fit in different parts of our branded network, and how to better service them. So it's a pretty important part of our strategy. If you look at us as a tech-enabled retailer, we've got sort of 4 blocks of our tech that are independently productized. So some of these are sold independently and monetized. So for example, Highfire Reach is a very advanced part of our platform that allows us to bring people into the cannabis ecosystem legally by using outside channels, digital channels, because the real key in Canada, at least, is we are not able to talk to consumers outside our ecosystem very effectively. So that was a key technical engineering feat that we were able to accomplish really because we just looked at the environment. We have a company that has 25 engineers that really just sort of thinks about these problems. We solve the problem by creating Highfire Reach. Highfire One is our advanced in-store sort of advanced digital retailing platform, controls every part of our store aspects. It helps us also optimize staffing. It allows us to run our store as media, which is important to a next-gen retailer. And then of course we've got Spark Perks, which allows us again to have this deep relationship with our customers. And I think that was so critical to our success in 2020 with COVID, because we started with such a large lead in terms of this direct engagement. When the environment shut down, we were able to keep communicating with our customers, and we've seen a lot of growth there as well. And of course, Highfire IQ, which is probably most familiar to many people, on this call, is our data and analytics platform, which not only provides us within market intelligence on how to better develop our house brand products, but also it powers a lot of external customers that are not in the cannabis ecosystem. So we monetize as beyond the walls of licensed producers. This is something that actually is used by the Bank of Montreal, CIBC. Like these are customers that are beyond the cannabis ecosystem, and that's important because we need to hedge wherever we can. So you can see here again, Hi-Fire IQ, Reach, and One are all sort of core parts of our platform. You can see here Spark Perks is also, we talked about that. Again, it continues to grow at a very, very brisk clip. And IQ here, you can see is something that, again, dynamic reporting is very, very important. This is stuff that we get very in real time. So we can action this intelligence in real time. It's not a report that we then analyze. It's an actual database that we manage and an actual piece of infrastructure that does require a lot of engineering, but it's well worth it. So I want to kind of wrap this by we're talking a lot about the Couche-Tard Circle K strategic relationship, because I do want to open it up to questions. So Couche-Tard is obviously very, very important partner of ours. They currently are an equity holder in the company. And what I want to focus on here is not so much the mechanics. Everyone can go to our website and to take a look at the ownerships and warrants and all these different things. But I think they need to understand our shared vision with Couche-Tard and Circle K, which we have in Circle K a partner that clearly understands effective and efficient operations. They understand international operations. We share a vision that Canada is not the only market. They're a global company. We want to be a global company too, and we know we need a partner to do that. And that was sort of part of our initial alignment. But it's also an alignment on where we think cannabis goes in the 10-year or the long-term future, which is ultimately once you've competed with the illegal market on price, which I think we're kind of getting there, and you can then compete effectively on product selection, which we're seeing with 2.0 and possibly 3.0 products. You come down to the last domain to competition really is convenience. And I'm not saying that cannabis is sold in a convenience store. I'm saying it has to be convenient to its consumers. And that's where you really need to think carefully about how you are building your distribution infrastructure and your network. You need to do it planfully using data, but you also need to have a partner that can help you achieve that goal. So I will flip here because I think this is probably the most important slide of this part, which is looking at our Couche-Tard relationship catalysts. And you can see we started it in July of 2019. And since that time, they've been an excellent financial partner for us. But more importantly, and this is all, by the way, in our public releases, our press releases, I just think there's a lot of noise in the space. So it's worth taking this opportunity to kind of point it out and put it into chronology. That if you look at in July 2020, we actually announced that we started a pilot program co-locating Fire and Flower stores with Circle K stores. We have 2 of these in Alberta, and we're very pleased with the results on those. So that has actually happened. It's been happening for more than half a year now, and we've got the results of that pilot program in. So this is an important way to think about how we think about cannabis and ultimately cannabis retail. And then, of course, in January last month, again, lots of noise in the system, but we announced that with our partner that actually the Fire and Flower gift cards are being sold in third-party locations, including 300 Circle K locations. So we have a retail network of 75 stores across Canada, and then we've got compliant gift cards in 300 additional locations. So that has to be a positive in terms of getting outreach up there. We know for a fact that obviously when you're gifted something or given something, it's a very, very high value referral. So that's kind of how we think about engaging customers and broadening the sphere to the kind of the echo chamber of cannabis and traditional channels. So I think with that, actually, instead of additional materials, actually, I will take one moment to just highlight our board, because I think it is important. We got a lot of executive bench strength, but if you look at our board of directors, again, very, very blue chip. We're very, very pleased, to have the chair of our governance and compensation committee is obviously Nora Minkster, former commissioner of the RCMP. You can see that Don Wright, our lead director there, is former chairman CEO of TD Securities and our executive chair, my partner Harvey, CEO of Dynacare and Director of Emblem. So a lot of bench strength here, including, of course, Stefan, who is on as well, which provides a lot of that retail bench strength to our board. So with that, I think I will go back and just open it up to questions, because I think that's going to be what is on people's minds.
Great. Thank you very much, Trevor. We're now going to open it up for questions. Audience members, you can continue asking questions in the Q&A function on Zoom and on the YouTube live stream. I'm going to start off here with one from me, and I want to start with a recent announcement. This morning, Fire and Flower announced it completed an at-the-market financing, having raised gross proceeds of $15 million. With the extra cash that you now have on hand, where do you see the most attractive opportunities to continue investing and growing your platform in the next year?
Yeah, I mean, I think that we're very happy to have completed that. It's obviously very cost-effective capital for us, and we're glad that we've been able to move through the process. I think that, similar to what Darren was indicating as well, we're going to see a lot of growth in Canada over the next 2 years, clearly. So it's very attractive to build stores. It's always, attractive. You can build them from the ground up. But I think we're going to see some other opportunities as well. And for us, the focus really is to do the things that we can be best in the world at. And one of those is our tech platform. So I would expect some of that to be invested in expanding our lead in that particular thing and expanding into some other sort of lucrative areas there. But also it's going to be into good old-fashioned store growth, because that is a huge revenue driver for us.
That's great. And in your presentation, you touched upon many of the things that Fire and Flower and Couche-Tard have taken and have done together over the past year to enhance your strategic alignment. My question to you and to Stefan is, where do you see future opportunities to continue to work more closely together and unlock value for shareholders?
All right, well, maybe I'll go first, Stefan, and you can finish that thought. I think that clearly we have a vision, a shared vision for U.S. and other markets. So as those things develop, we do see collaboration there. I think there are other ways when you look at Circle K and Alimentation Couche-Tard as a large retailer. There's other sort of ways that we can collaborate. We happen to have a pretty innovative tech platform as well. And so, again, aside from just sort of retail and other markets, I think there's some other things there that we'll keep to ourselves for now, but those two are pretty big opportunities. So maybe Stefan?
Yeah, well, thank you for having me. It's a pleasure to be here. As Trevor said, we've been pretty much strategically aligned since the beginning of this relationship. So we've seen the market evolve in Canada, in the US, and in other countries. So we continue looking at every opportunity and see how we can best take what we can bring to the table. Namely, we've got a lot of real estate in key locations across not only the US, but a lot of other markets in the world that eventually will legalize. So I think going forward, that's certainly something we'll want to leverage is looking at our real estate. Also, we have a presence in all these markets with boots on the ground. We know the customers, we know what they buy on an age-restricted level with alcohol, cigarettes. So I think continuing to work together, sharing experiences, sharing customer behavior, and sharing our expertise, and finding the right location, because it's always good and easier to have success when you're in a monopoly situation, but once it becomes competitive, location is key. So I think there's a lot there we can do. Trevor talked about the co-located stores. I think that's, for us, that was a key test we wanted to do early, so that we could see how customers behave to that and how we should adapt it should we want to pursue that in other markets.
That's great. Thank you. Trevor, in your presentation, you hinted at it. Stefan, in your remarks just now, you hinted at it. The legal cannabis market is not confined to just Canada. There's a large international opportunity there. How can Fire and Flower expand into international markets? Which international markets are you looking at? And how can Couche-Tard offer strategic support as you go internationally?
Again, I'll maybe start it, and Stefan, you can add there. But I think that from the get-go, we've always known it's going to be a global opportunity. So we've been watching every market pretty carefully. If we've done something, I think, really well, it's watch the regulatory environments, not just in the U.S., but in places like Australia, Israel, Poland. Like we're very much have a global vision on that. And we certainly, from Fire Flower's perspective, we identified early on that to go to these other markets, you would need to have a partner that understood those local markets, understood the real estate in those local markets, and had the sort of necessary on-the-ground experience and patronage in those places. To be operating natively is a huge advantage in those places. So in terms of the US market in particular, because I know that's on people's mind, obviously I think it's reasonable to assume that we've been thinking about that for quite some time. And to the extent that we're able to do things there, I think it's reasonable to assume we'll be rolling that out. But as was pointed out, there are impediments to that. I think more importantly, though, is to master our operating model, to master the hub spoke digital, delivery-based, customer-facing model, so that the model is bulletproof. So no matter what model, so in what market we enter, we're entering with a very strong first foot. So if we have to wait a little bit, we are a very, very competitive environment here in Canada, much more so actually than any other market. Alberta was a good example because that is worse than, it's more competitive than Colorado, and we're succeeding there. So let's hone our model, and that's going to be a big advantage to us.
That's great color. Thank you. When you look at Hifyre, it's obviously a very exciting opportunity. It's a comprehensive digital platform with plenty of potential. Last quarter showed a big leap forward in commercializing that platform. Trevor, could you talk to the platform, how the platform continues to expand in 2021, and what investors should look for in terms of commercial opportunities? And of course, Stefan, perhaps you would also like to add some color on your perspective on the Hifyre platform.
Yeah,
why don't you start this one, Stefan, and I'll kind of add the stuff on the end.
Okay. Yeah. Well, if you go back when we connected with Fire and Flower, that's really what got us excited about Fire and Flower, is how much we're advanced versus a lot of the competition, and even comparing it to our core business today that grew through acquisitions over time. Having the capability to start from scratch with a platform that grows with you and that you can evolve because you control it, I think is a key strategic advantage of Fire and Flower, and it probably goes, I wouldn't say unnoticed, but undervalued. And as the Fire and Flower moves forward, whether it's in Canada or in the US, I think we'll see. We're just, I think, scratching the tip of the iceberg. The growth at which it's capturing new customers, new Spark Perks members, the value of these customers versus others, and the fact that these are all age-gated customers that you can talk to in a market where it's extremely difficult to talk to age-gated customers. I think there's a lot of value there that has yet to get unlocked. Right now, I think the focus is getting building profitable stores, but that underlying capability that Fire and Flower has, I think will eventually emerge, and we'll see a lot more value there.
Yeah, I mean, I couldn't add much to that. That's exactly it. It's the ability to make new things as they emerge, because we own the capability is absolutely key. Hifyre Reach, we created this year almost in response to the pandemic, so yeah, I think that's a good summary, Stefan.
Thank you guys very much for that. And we got time for one last quick question here. So just looking ahead to 2021, what catalyst should we look forward to? What's most important in your mind? And we got quite a few people asking about whether US exchange uplisting is possible. If you could comment on that.
Yeah, I mean, I think that investors should expect that we're looking at all opportunities, that we're very aware of the U.S. opportunity and thinking about it constantly, and that we'll make the right strategic decisions for our shareholders. I would say key catalysts for us are, yeah, you have to have a US strategy, right? And so to the extent that we start rolling that out and start explaining that, I think that people should look at that for all companies, not just ours. People need to have a US strategy as a catalyst. I think another catalyst, though, for us would be how we evolve our digital platform. I think, I would hope people pay attention to those press releases. And then the other part is, for us, a catalyst is increasing this engagement with Couche-Tard. That's what I would say kind of the three catalysts are. I don't know, Stefan, do you have a different view or take on that?
Well, obviously, I think the biggest catalyst for sure would be what's going to happen in the U.S., how it's going to happen, and how can every retailer in Canada get involved in the retail market. So I think Fire and Flower, just like anybody else presenting today, is prepared for different scenarios of what's going to happen in the U.S., and that's certainly going to be the biggest catalyst. The second one is probably the consolidation of the Canadian market that I think at some point will likely happen, as a few big players today have emerged, but I'm sure there's more consolidation over time that's going to happen as retailers get more and more sophisticated, and customers expect a certain level of service. So I think there's going to be those two catalysts to look at.
Well, there you have it, folks. Thank you very much, Trevor and Stefan, for joining us today. Excellent comments on the business, excellent comments on the industry, and we look forward to watching you in 2021. Thank you very much for joining.
Thank you.
Pause for just a moment as we queue up our next presenter. And we also want to thank our audience for continuing to be highly engaged. We can't get to all your questions, but we do appreciate, and we will try to follow up. Oops. Okay, next to present, it is my pleasure to welcome Mimi Lam, founder and CEO of Superette. Superette opened its doors in Ottawa in April 2019 and almost immediately caught headlines from major international and national media outlets. The store's innovative, vibrant design, unique approach to customer experience, and engagement with the local community has made it one of the most recognizable brands in Ontario. The company has 3 high-performing store locations in Ontario today, with additional locations planned in the near future. With that, I'd like to turn the call over to Mimi to tell us more about Superette and how you created such a unique and energetic brand. Mimi, please go ahead. Mimi, if you're online, you may start your presentation.
Great.
Perfect.
Awesome. Hi, thank you, Andrew, and thank you, Echelon, for having me. I'm happy to be here and to share our story. I'm just going to see how this presentation works. Great. So I'm sure you read all of this. Thank you. So let's get into it. Welcome to Superette. What's in a name? If you didn't know, Superette is defined traditionally as an alternative name for a compact supermarket, corner store, or mini mart. It's often used in places around the world like New York and Newfoundland and New Zealand, with a focus on building community and an emphasis on bringing a familiar approach to our brand. We created Superette to be your friendly neighborhood cannabis shop. So who are we? Superette is the retail brand that makes cannabis buying as enjoyable as consuming it. Retail experiences is the last place where customers can truly connect with brands in a meaningful way. Retail experiences outside of cannabis are becoming more diverse and niche, but cannabis retail risks becoming a monoculture, where it sometimes seems companies confuse the desires of government and investors with the desire of customers. This is our opportunity. We are the retail brand that treats cannabis the way customers do, recreationally. So the Superette brand represents a new era where cannabis is enjoyed like any other vice. So what sets us apart? First of all, we are building a retail experience, not a dispensary experience. Retail is the foundation of our company and where we immerse customers in our brand. This is where we create loyalty, gain data, and build resonance. Secondly, our brand. The emotional connection we have with our audience is what will matter, especially in a crowded space. Third, we aren't afraid to look at things through a different lens and take a fresh approach. We are different from the inside out, and we push the boundaries of what is considered normal. And last but not least, our story is just beginning. I'm talking to you as the only private company on this event and with only 3 stores. And yet we are relevant enough to share this virtual stage with our public peers, some with over 70 stores across the country. We've been patient in building our foundation of strong operations and branding. 2021 will be our year to scale and to begin realizing our upside. First things first is our retail. Superette is best in retail. Our retail equation is made of numerous factors that span across real estate, our design aesthetic, our in-store experience, our product curation, community. Taking all these factors into account, we've seen outstanding economics from our stores. In our fiscal 2020, we saw over $6,500 sales per retail square foot. We have strong average basket size at over $65, and our retail gross margins at the retail level is 33% and growing. We see double-digit EBITDA margins at the retail level and positive low single digits on a consolidated basis. The first step in our retail equation is a real estate philosophy. We are building an ecosystem of stores that make sense in a cohesive portfolio and bring something special to the neighborhood with every unit. It is important for us to secure locations not only because there's an available space, but because we are building a portfolio that strategically places our brand in target markets. And these strong locations need to perform not just now, but in the long run. With the proven value that we bring to our spaces, we are currently the top candidate for high-end landlords. We will win in urban markets. And what makes our retail experience so special? I mean, first of all, our retail spaces are familiar. We borrow graphical interior devices from a combination of neighborhood staples, such as diners and your delis, to bring a sense of familiarity and nostalgia. Comfortable and accessible, but also grand and exciting. We are thoughtful and we care about every single detail in our spaces, from how someone greets you at the door to bring a tactile experience in the cannabis buying environment. Our stores bring joy and we have fun with it. We treat every single moment as our opportunity to surprise and delight. We give our customers agency. We know that it is their customer journey within our stores and that is their personal journey with cannabis. We present them with endless possibility and allow room for true organic discovery. Inside our stores, like any other normal retailer, product curation is key, and this is a differentiator for Superette. For our cannabis products, we have an extensive offering, and we use that to test and learn what resonates or not with our customers. Outside of cannabis, we carry our own branded goods, and we are a curator of really interesting, neat brands and products that we love. Our stores are the desired spots for many lifestyle brands that have presence in, and we're exclusive stockists of many brands to come. Our focus on non-cannabis goods has made us synonymous to be the one-stop shop for your daily and home rituals. And this pays off because non-cannabis goods are sold at a higher margin and they make an outsized portion of our business. With this foundation we have built, and by iterating on different store formats and value propositions, we are going to be ramping up our growth quite significantly. Our current plan is to have a portfolio of 10 operating stores by the end of this year in 2021 and have 25 and over 25 stores by 2022. We're creating our experience to be bigger than Ontario and bigger than Canada. Something that is unique to Superette is our brand resonance and engagement, and this is something that sets us apart. It is incredible the amount of buzz we have generated so far. There are many times where people just assume that we're already a massive brand or that we come from a place like California. As a brand, sometimes it's not about what you say about yourself, but what others say about you. We've been featured by Tier 1 North American media outlets, including Forbes, New York Times, and many others. We are the first cannabis retailer to be featured in Globe and Mail. So to put that in a bit of context, we punched way above our weight in terms of our share of voice and brand sentiment. So based on 2020 data from a media platform called Meltwater, Out of a select group of cannabis retail chains, our share of voice by reach, which is measured by media impressions across all platforms, matches that of large chains and outranks many other retail chains. Similarly, when looking at brand sentiment, which is measured by what is known as an M score, which is based on a combination of editorial mentions, reach, tonality, we sit at the top in that sentiment. This type of relative reach is incredible considering our peers are nationwide chains with dozens or more stores. Remember, we still have only 3 stores, with 2 of them only opening within the last 8 months. And so what? We are the most sought after retail concept in Canada. We've garnered the attention of international media. We are the first retailer to win 2 Gold Clio awards in a row. We won the 2nd Gold Clio at the end of 2020 last year in brand design. And Clio is often any industry. And practically, this type of recognition is beneficial, for example, when talking to prospective landlords and securing top real estate. Not only that, but we are the most sought after lifestyle brand in cannabis. Our audience follows us closely, love whatever we put out into the world, and we have an overwhelming amount of inbounds for collabs, partnerships, requests to bring our brands to new markets and in new formats. Community is part of our brand DNA, and we know that we can make a difference. We have spent the last few years living our brand values on our sleeves, and we show up. We have made an active effort to support the neighborhoods we are in by partnering with local businesses in fun ways, like having a burger phone at our Summerhill store and a pizza phone at our Spadina stores, which is going straight through Rosedale Diner and Big Trouble in the Toronto communities. We have taken a stance to do better for our community and our planet with the recycling initiatives and ongoing volunteer and donation efforts to groups like the Ottawa Food Bank and the Parkdale Food Bank. We also recognize our privilege in this industry, and we use our platform for social good and to be an ally for minority groups. So far, we have partnered when supported Cannabis Amnesty, Fluoride Coalition, and the Urban Alliance on Race Relations, many more to come. So why does this all matter? How we show up in everything we do as a brand is important in the eyes of today's conscious consumers. It is especially crucial in the Canadian legal cannabis industry because it has been shown that brands are still not top of mind for consumers buying cannabis. In fact, in the most recent report from the Ontario Cannabis Store, brands rank only 13th in importance as an important attribute in the customer's buying decision. The emotional are opportunity in the space. So in an industry where people don't care for cannabis brands, they care about us. As a company, we always keep things fresh. From the inside out, we do things differently. We're a values-driven company that believes in the intersection of people, planet, and profit. We attract top talent and hold the brand in their hearts and bring their passion and innovation into everything they do. In a consumption society, consumers are looking for brands they trust and share the same worldview, and we're here for them. In building out our brand ecosystem, we create experiences that inform, inspire, and entertain our audience, whether that be physically at our stores or digitally. In 2021, it is not enough as a retailer to just have a website. You need to take an immersive omni-channel approach that drives people from online to the store and back from the store to online. Bridging this physical and digital experience is as much as an art as it is a science. We bring fun and engaging virtual vibes, and we have built an intuitive digital experience that mirrors the feel of our physical spaces. What we have done through our website, social media, and initiatives like Spotify playlists and Instagram live streams has tied together entertainment and commerce. This hits our top line via e-com sales, and it's always fun to see how far our demand is. So far, our product has reached all across North America and all the way to UK and Europe. Speaking about product, Superette is a brand beyond retail. We continue to launch highly coveted branded apparel and lifestyle goods, most of which we sell direct to consumer, but we have started playing around with wholesale given the demand. Every collection to date has been sold through, and lifestyle and streetwear stores from all around the world have inquired to carry Superette branded products. Building on this, we were the first cannabis retailer to launch our own labeled cannabis products into the market last year. We're leveraging our learnings and expertise as a retailer to handpick our partners and offerings and build what we believe as a compelling cannabis product pipeline. This adds significant revenue potential with limited capital risk. We're building a portfolio of brands we believe people will crave with a focused portfolio of products, all of their own spin, of course. So I hope you've enjoyed hearing about what we've been building so far, because it's just the beginning. Since the end of 2018 and Superet's inception on our first store in Ottawa in April 2019, we've had a proven track record of success. With every season and every regulatory change, we've been building momentum, growing organically, and catching the eyes of everyone around us. We continue to execute and gain momentum as an operator and as a brand. And this is just a bit of a timeline just to show just what we've done over the last 2 years. We are setting the stage to win in the recreational market. We have focused on quality over quantity, and we are here to own the emotional connection with our customers. This will become their backbone as we turn our attention now to speed and scale. Think of the impact that we've had with only 3 stores and limited capital. Now imagine how that expands with significant retail and product reach. Over the next 12 months, Super will be focused on opening the next wave of retail experiences, launch a new brand, commercialize a portfolio of cannabis goods, and continue to generate hype with our private label non-cannabis collections, a holistic experience. And to really lead this growth is not just myself, but I'm surrounded by a team of experts and a group of incredible human beings I call my family. We have a diverse talent pool and diverse set of expertise, and our retail prowess comes from team members that not just worked at, but helped grow to establish retail brands like Lululemon, Burberry, Sage Wellness, Canada Goose. We also have great corporate governance with an independent board of directors. We are approaching our growth with a really clean capital structure, and this is something that I think makes us stand out as a company. We have raised minimal capital to date, with the last financing round being over 2 years ago. Our cap table is tight, and our cap structure is very simple with no weird instruments or no debt. I believe that retail is the story of cannabis this year and beyond. I know that you and Echelon also share this belief, which is why we're all here today. So Superet is here, and we are here to win. Thanks again for having me. I hope that I've been able to share a bit of a glimpse as to how we're carving out our space in this industry. If you remember nothing else, remember that Superet is the cannabis brand that makes buying cannabis as enjoyable as consuming it. I hope you have a super day.
Thank you so much, Mimi. Thank you very much for the presentation. I'll just kick off the questions here. First up from me, I know you talked a little bit about your rollout plans for 2021. We would love some more details on that. 3 stores open today. What could we look forward to in the next couple of months? What can we look forward to by the end of the year? And I believe I saw a map that did show some US opportunities there as well. Could you perhaps comment on that?
Yeah, for sure. Thank you, Andrew. So this year is quite exciting from a retail growth perspective. We have a handful of locations that are ready to go. We have spent the last year understanding the impact of things like COVID and understanding how to build delivery and a digital experience into the retail space. Our focus when it comes to retail growth is to ensure that we can scale effectively at a low cost while still taking a bespoke approach, making sure that we can involve and enroll community along the way. So right now, currently the growth contemplated for this year is still focused in Ontario, targeting key neighborhoods in key areas in specifically Ontario, focusing on urban markets and some other brand relevant municipalities. To your point about what you saw on the map, we are always assessing opportunities to bring the brand outside of Ontario, whether that be across the country to western part of Canada, Alberta, BC, or into places like the US. This brand is truly built to be global, and the way we are scaling and preparing for that is based on the foundation on what we are doing right now in Ontario. It is important for us that we continue to grow organically because, again, we know that customers are fickle and we know that it's going to be a crowded space no matter where we go. So we want to make sure we're taking care of our own backyard and to be able to, tackle everything else with speed. And I just want to touch on really quickly in terms of the model of our growth. Currently, right now, in case anyone wasn't sure, they are corporate-owned stores. We have taken a corporate model. We will not be looking to franchise. Right now, it's a critical stage in our brand story right now to allow any sort of other decision makers that could affect the growth of our brand. So at this point, all the growth will be organic and corporate, and then also looking at inorganic growth when entering other markets if that is an opportunity.
Great, thank you for your response there, Mimi. And I believe we lost your camera, so if you're able to flip that back on, that'd be awesome. Something unique to the Super Ed experience, I think, in the stores you have open today and the stores you hope to open in the future, has been this sense of local community and branding and the energy around your brand. As you scale, as you expand your store network, how do you ensure that you protect that and you don't dilute that unique brand experience that you currently have?
Yeah, so our brand is definitely something we're really proud of, and it's something that continues to grow and be fluid and change. And so the importance of that is ensuring that that our brand is communicated across internally and externally. So everything our team members do is how the brand shows up in all aspects and facets of this company. So whether that be marketing or retail, all the way to the store expansion and the budtenders that are in store, how we engage our community and ensure that we are the cornerstone of every neighborhood that we are in, how we look at partnering, collaborating with the neighbors around us, how we engage the residents and the businesses around us. Those are all elements that are taken upon not just at the corporate level, but at the retail level as well. And that is critical from an engagement standpoint, a customer standpoint, but you also see it in our design aesthetic. All of our retail stores are, working with the existing infrastructure and the spaces that we enter into. So it's not the 100% the same millwork package in and out. It's making sure that we are taking a tailored approach to each space and to work with the elements that are key to our brand and distinct and notable to our brand, and making sure it actually works in that community. All those elements, might be simple to think about, but actually is every detail along the way. And that holistic vibe is what we bring into the space, and that is going to keep us differentiated in the long term.
That's excellent. We do have a number of investors in our audience, so we are getting some questions now. Do you have any plans to list publicly? If you're not planning to list publicly, how do you ensure that you have capital to meet your growth objectives?
Yeah, for sure. That's a question I face all the time. So, since up until now, we have never really looked into the public markets, only because as any startup, it's a lot easier to be able to essentially do what we do without the pressures of being public. It was also important to me that to make sure that if that is an option and what we are going to do, that we were at enough scale. And so 2021 is going to be the year that we start contemplating, capital markets activities like that. So far, we have raised money in the private markets and really surrounded ourselves with supporters of our brand and our company. And moving ahead, we are still looking for that private capital support, but I wouldn't say, going public is out of the question.
Awesome. An important component to our cannabis thesis on the Canadian cannabis retailers is the unique position of the retailers to own the relationship with the consumer. In your experience with Superette, have you seen any consumer preference towards the retail brand over product brands? Do you see product brand loyalty emerging, or does the retailer still have considerable influence to guiding purchase decisions? And finally, what opportunities are there to monetize this?
Yeah, for sure. So retail is, from my perspective, the best place to be in this space right now. We are bridging the gap between what is being produced by licensed producers, the products and the brands, to the customers themselves. That is a critical piece of the value chain, and we have a lot of influence, to be honest. Everything from what is actually at the stores to ultimately what customers walk out of the store with. And so, what we have seen is that product brands right now still have either limited to no resonance to definitely limited to no loyalty. And especially with new brands and new products coming out on a daily basis, it is really difficult for those brands to keep up. And we do see that. As a retailer, we have the unique position to be able to define what those preferences could look like. And what we've done along the way is to build that trust and that sense of community, such that Superette right now is not seen just as a retailer, but as a brand. People are willing to spend the money on buying our apparel. They're following what we do with virtual events and activations. And when we translate that into product, we see that as well. And we see that right now with non-cannabis goods, but hopefully very soon with cannabis goods. And when you take that holistic approach with our own branded goods within our own branded space, it's easy to jump to the conclusion as to how we can direct, those dollars.
That's great color. And when you're having those conversations, with your customers and gaining insights into their preferences and habits, are you able to relay that back to the licensed producers? Are you able to work with licensed producers? And are there any plans to develop your own private label products for your store shelves?
Yeah, we have a really great relationship with the licensed producers. It's important for that two-way communication to happen so that we can tell them what's working, what's not working, and they can in turn tell us, what's coming down the pipe and what they're working on as well. So it's really great to have that visibility and insight. When it comes to private label products, that is going to be quite a big focus for us this year and moving ahead. We are launching a suite of Superette branded products, and we will be launching a new brand soon that is unrelated to our retail banner, just to target a different customer segment and to be able to take different approach to product formats and to have different partners. The great thing is that when talking to licensed producers, they recognize the value that we have built and the brand that we've built. So the inbound for partnerships and the ability to collaborate is truly immense. And so that makes our job kind of opposite problem where we have potentially too many options on the table for private label partnership. But that is a good problem to have, I think.
Thank you for that, Mimi. Next question is, we recently saw a Western Canadian cannabis retailer announce that they're going to move towards a more value strategy. When you're looking at Superette, how do you see yourself responding to that? Do you think that there's a place for value and premium to coexist? And how would you think of yourself on that scale?
Yeah, that's a great question. So I don't believe that cannabis should be viewed differently from any other consumer good. There's a place for different types of strategies, all the way from value to super premium and super aspirational. And so looking at a strategy like that, all I can say is good for them if that's the approach that they take. It's disappointing to see that there is a sense of racing to the bottom. We don't believe in that strategy. As an operator, margins are not great working with the government to begin with. So I think that's a risky approach. Secondly to that, that's not what we are. We are here to provide a curated experience. And while we won't put ourselves at the high end of premium, the great thing about the Superette brand is because our brand aesthetic that we can really play into, what is premium or what is more mass appeal, depending on the store, depending on the market that we're in, and really what the specific value offering we want to bring at the store level, depending on the unit. Again, back to the portfolio approach, it would make sense for us to have potentially a more premium offering in one space, and a few blocks over and have a more economical offering. That allows us to have a lot of flexibility when looking at that. And I think as the time goes by and as more retailers come online, you'll start seeing, or what I hope to see, is that these companies are taking a very tailored approach, or else we're all, pseudo variety stores at this point.
That's great color. And I'll try to squeeze in one more question, 30 seconds or less. What are you most excited for in 2021 with Superette? And what should investors be looking out for?
Yeah, for sure. Really excited for Ontario growth. Really excited for, fingers crossed, a US partnership. The whole capital markets angle is something that we are monitoring very, very closely. So don't be surprised if you hear more from us and from Superette.
Thank you very much, Mimi. We really appreciated having you today. The brand is doing amazing. We appreciate your insights on how you're able to do that and look forward to that expanding across Ontario and beyond that in the near future. So thanks again for joining us today.
Thank you.
We'll pause for just a moment as we queue up our next presenters. Our next group of presenters is one of the newest Canadian cannabis retailers to list on the public markets, and we believe they will offer unique insights into the British Columbian retail cannabis landscape. It's my pleasure to introduce Daniel Petrov, Chief Executive Officer, and Eleanor Lynch, Chief Operating Officer of Chiaro Holdings. Chiaro operates 7 stores across 2 provinces with plans for continued expansion across the nation. As you'll see in the presentation, the growth profile of this retailer has been much steadier than we have seen in the upstream licensed producers, and the company recently reported a milestone quarter hitting positive EBITDA for the first time. With that, I'd like to turn the call over to Dan and Eleanor to tell us more about Chiaro and the opportunities for your company ahead. Thank you very much. You may go ahead.
Eleanor, you're muted.
That's great. How about now?
You're good.
Loud and clear. Thank you.
Okay, great. Thank you. Thank you, Andrew, and thank you, Echelon, for the invitation. I'm Eleanor Lynch, Chief Operating Officer, and I'm joined here today with Daniel Petrov, our founder and Chief Executive Officer. Previously worked with Aurora as their EVP and co-founder there. So excited to join Echelon today and share a little bit about the Chiaro journey. So as you can see here, this is one of our stores. I'll just pause for a moment, and this is in North Saskatchewan, our Lynch location. Beautiful location. Definitely recommend it in the summertime, as it is North Saskatchewan, but certainly a beautiful spot where one of our first stores that we opened actually in the Saskatchewan market. So really, who is Chiaro? And I think where I'd love to start with is talking about our obsession with delivering unforgettable first to all of our customers in the communities that we operate in. Chiaro is a brand that is focused on engaging consumers at the lifelong exploration of cannabis, both new users and experienced users. And I think that what we're most proud of is the fact that our team is retail and cannabis oriented. We're passionate about delivering great experiences under both banners.
Yeah, as for Chiaro's company Snapshot, we're a Vancouver-based, BC-based retailer, omni-channel retailer. We also have a wholesale distribution center in Saskatchewan, much like Fire and Flower. We're listed on the TSX Venture Exchange on October 2020. And we currently operate 7 retail stores, 5 in BC and 2 in Saskatchewan. We have a senior management team that has collectively over 40 years experience. And I think relatable to the industry and the experience we're trying to deliver. Anywhere from Lids with Eleanor, who's on the call. She was with Lids leading their operations for about 8 years and grew the store footprint from about 80 stores to 153 stores. We also have our CFO, Janet Hoffer. She comes from Rocky Mountain Chocolate. So very relatable to the brand experience we're trying to do in Chiaro. And also the rest of our finance team, a lot of them are from Sage and Salt Spring Coffee. So just high-level company snapshot. We're new to the circuit, freshly minted in the public markets, and really just a high-level look at what we're doing. We have a run rate currently with a 7-store footprint and wholesale about 20.7 million, and we have the leading gross margin in any retail company on the market right now, 38.2, and a really, really good gross blended margin with our wholesale business of 30.2. So really new to the circuit, but that's a really high-level snapshot of where we sit today.
Thanks for that, Dan. I think that leads us into brand and community. We've heard a lot from great brands on the call, but I am a big believer as a longtime retailer that brand is certainly earned over time through loyal customer interaction. And one of the ways that we try and resonate within our communities is through the brand and how the stores look and how they operate, the stakeholders in our communities, and certainly our employee base. We are excited Chiaro members of the family and looking to bring things like art into our stores from local artists and other various membership modules that we've just launched, My Chiaro, which allows customers to follow their Chiaro journey within their community and focus on the brands that they love in terms of the licensed producers we partner with and the different ways that they can access their Chiaro stores in the communities throughout British Columbia and Saskatchewan.
On this slide, you'll see, to keep it very simple, when we incorporated in December 2017, a little bit of a 3-year roadmap to where we are December, closing out the 3-year period from 2017 to 2020. And really what this shows is in 3 years, the first year of Chiaro, we had no stores open. Really all the stores have been open the last 2 years, and we've doubled the footprint every year. So second year being open, 3 stores, 2020, 4 stores. And going from this in retail in general, I think for all the retailers on the call, it's a pretty impressive time that we've condensed what we've all done here in 3 years. So 2 years, in 3 years, gone public 3 months ago, announced EBITDA positive for a very small store footprint compared to our peers. So just a lot of good stuff I think Chiaro's done, but the whole industry has done.
Absolutely. Great point, Stan. That adjusted EBITDA is our last step. I mean, you said it was simple, but it certainly has not been easy or simple, which I think our other presenters alluded to. And so Chiaro operates in both British Columbia, Saskatchewan, and we do have a retail operator license in Ontario. And so we have 7 leases and 7 stores that are currently open. And we're an incredibly efficient retailer. We focus on, as Dan said, in the last 2 years, doing a lot, doubling our footprint over the last year, going public, and the adjusted EBITDA result, not to mention the great gross margin of 38.2 on the retail side. So we've really been able to talk a lot about, you know, that journey over time and the real foundation of great brick and mortar retail that is combined with an omni-channel approach from the outset. I met Daniel in 2018, and I was looking to leverage my 18 years of retail experience. What I loved about what Daniel brought to the market was this excitement around how do you build an experience, how do you integrate tech. And so he and the team that he's built around him has really been so excited to find new ways to do that. Saskatchewan is such a differentiated market in terms of learning and competency. And so we've built competency across the wholesale part of the business, e-commerce, last mile delivery, and great retail foundations. And so I think we're really excited about sharing that journey with a lot of you today. About how we did that and the journey along the way.
So this slide right here kind of boils down to 3 things: timing, team, and capital. And if you've seen companies and seen any presentations and people speak on it, it's really what it boils down to is the timing of the opportunity, the team you have in place, and the capital you have in place. So, you know, even for your strategy, we're lucky to be in BC. We're lucky to have our footprint here and have started because the timing was right. It's the most defensible province in the country. If you look at the slide we're going to go through, you'll see that. So the timing of being in BC and really cutting our teeth on licensing and getting through the licensing of BC and the complexities of the defensible market here has really built a really huge strength and competency in our licensing team to now go east and really grow the footprint. So timing, team, the team we have, I mean, 40 years collective experience. You know, Eleanor came and moved out west to join the company, but she ran Lynch Canada, Lynch Sports Group, again, a footprint of about 153 stores out in Toronto. And then just capital. I mean, 3 years kind of minted on the public markets here. Not our first go around. Our market is still yet to be efficient, but once we get there, those 3 things in tandem produce success. So I'll leave it there.
Yes, that's great. I don't like to remind my teenagers that we made that move, but yes, it's been exciting. And so what's coming for us, right? It's growth, it's expansive growth, It's aggressive growth, as we've shown over the last 2 years, and really using the efficient four-wall profitable model that we've built out in this last 2 years to leverage that in new markets, such as Ontario, which we mentioned. We have an operator license, and really building out more unforgettable first and delighting the communities that we operate in. I think that great customer service and great retail and a four-wall profitable experience for retail starts with the product and starts with an expansive and explosive growth strategy over this coming year.
Well, thanks, Al. This slide number 11 is competitive landscape. I think this is a very valuable slide to look at. It really shows Chiaro's positioning against our peers in the industry. It also shows you the regional stack up from west to east. And I think what's really meaningful about the slide, just from an investment perspective, is, I'll say if you're going to put your castle somewhere, BC looks like a place to have a castle because it looks like naturally has a moat around it. But if you go down to the end of the slide, you see our store footprint. A lot of companies are talking about scalability, how many stores we built, and it is impressive. There's a lot of stores being built in a very condensed time frame. In the producer days, though, if anyone remembers, we called that funded capacity. And growth was great at the time, but what happened is everyone grew too fast, and they had a model that wasn't scalable, and unfortunately we had to scale back a bit, and we're figuring stuff out. But if you look at these sheer numbers and the fact that each store in this category scaled that within 2.5 years of legalization, you can kind of divide out, easily to do 30 stores a year. So growing store footprint is tough, but I don't believe it's the toughest thing, and I think it's again down to timing. So if you just look at again where we're at is an investment compared to our peers, even a diverse portfolio of investment. If you're not invested in BC, I'd ask why not. Especially in the producer market. If you're not diverse throughout the producer market in the beginning, I'd ask why not. But if you look at our store footprint and divide it by one of the others, you can kind of start to tell within a year or two where our growth is going to be. So I'll stop on that slide because I'm excited, but no, this is me again.
Yes. I think this one is slide 12, which really shows retailers and their positioning in the marketplace.
Yeah, sorry about that. So this slide, exactly. This slide is, again, a good slide of information, how everything stacks up. And again, where we stack up in relation to our peers. And what I love about this slide is I do not think our peers are overvalued. I think the industry itself is undervalued. Just Chiaro seems to be very undervalued. We have an inefficient market, again, been public for a very little time here, but again, from an investment perspective, with the geographic diversity, with the, you call it a castle and a moat, and the ability to expand now access to capital and the right team. I think the slide speaks for itself.
Great points. Yes, it's early in the journey of cannabis retail in Canada, and certainly the revenue growth in the top right-hand corner. There's a lot of numbers on this one. I just want to focus on the growth in the top right-hand corner for revenue. If you look quarter over quarter, it's fantastic, explosive sales growth that we're looking to replicate in these next coming years. I think what's really amazing about the Chiaro team is, again, we did build it around two core principles, one of them being retail, great retail, obsessed with great retail experiences, but the other around the product and cannabis and our familiarity and understanding and relationship with cannabis. And so incremental sales growth through great and additional margin gains, through same-store sales, which have been growing year over year for the 2 years that we have a couple stores hitting 2-year marks now. But as well, our understanding of the product and our ability to manage turns and inventory and leverage that learning, our My Chiaro membership program with our licensed producer programs. And I think that, when we look at our exposure in Saskatchewan on the wholesale front, those relationships with licensed producers really do speak to the ways that we can leverage all of this great retail that we've created over the next coming years.
So this is another slide just to demonstrate where Chiaro's at on their debt levels compared to our peers. I think our peers are mostly, people you could say over levered, but I think optimally levered. If you look at the debt leverage that you see in retailers in general, I think we are under levered. I think this slide shows really what it shows is where our competitors have got to on the debt and capital funding and raising side, and the growth they've had. So what it does, again, if you're looking at an investment standpoint, if you're looking at a company like Chiaro, you can kind of see the fundamentals line up and saying, well, they have very little debt, they have access to capital, and they have a model that they can scale across country from a very defensible market. So I think that's all this slide shows, is not that our competitors are overweight, I may not speak to that, but just the fact of how much capital to be optimal on a debt leverage ratio that Chiaro has. So again, our ability to access capital, our ability to grow our debt to fair market value, a fair debt lever, optimal. I think that's what this shows. And again, just really excited. So let's keep going.
Yeah, there's a lot to be excited about. And so I think we really wanted to keep it to questions. We know we're the last one of the group, and we really appreciated Echelon inviting us today. And we look forward to your questions. We're excited to hear some.
And we love to have you here. So thank you for joining us today. So I'd love to kick off the question session. My first one here on BC. BC has been such an elusive market for many of the publicly traded cannabis companies. You definitely bring unique insights from that market. How are you able to navigate the complex licensing process there? And how will you continue to expand in that market going forward?
Yeah, great question. I think I can speak to the complexities of the market. BC is a little bit of a different market for anyone that knows BC. Even in the liquor market, it's a little bit different. You have a lot of craft producers here, and as opposed to the rest of Canada. I think the complexity we found, and I feel we're somewhat fortunate to have landed in BC and grown up in BC here with cannabis retail, because the dynamics between municipalities and the provincial government and the regulations they set up here are quite complex. So it wasn't even just the bottleneck of the governments figuring out themselves that was happening, across the board throughout the provinces. It's also the way the provincial government intermingles with the municipal government. It's very community-based. It's very municipal-based, and municipalities in Canada, or in BC, have a huge say on where stores go, what stores do, and how many stores they have. So yes, there's a lot of people and a good-sized population in BC, but that's the complexity. So you kind of have to, I would say BC is a market where you kind of wanted to be in first, as opposed to, I do this comparison quite often, as opposed to Ontario, where if you weren't in the lottery first, you probably don't want to be first, because the trend of prices is coming down, the demand's going down, the store supply is going up. So in BC, going back to BC, and how you have to look at the market is, for instance, for one store in Vancouver, they had licensing, so pretty much development permits were spread across the board. You have a big buffer zone, 300 meters from stores, 300 meters from schools. So if you look at our location on Kingsway, we have a school on each side. So you're talking 600 meters before any other stores can even take a chance of that area, that zone. And if you look at Victoria, again, you have to zone the property. So that Victoria, you have to zone the property to get in Victoria. If you look at our Port Moody location, there was seven. We had to go to seven hearings in Port Moody just to go through with their process municipally, and they closed the door on 5 and said we don't want any more for 2 years. So I think every municipality in BC is very, very different. So the timeline to get in isn't just because of an application demand bottleneck. So if anyone wants to come in BC now, it's just going to take some time. But it's the complexity between the province and the municipality in that relationship. I'm rambling here, but it's really that's the complexity. So I think we had to figure that out really, really early. We cut our teeth on that. We built a huge competency in licensing, and with that, in our Ontario retail licenses, I think we're just in a favorable spot to keep growing east here.
That's great color and insight into that market. Appreciate that, Dan. I'd also like to ask for a comment on your earlier comment, on having the higher gross margins in the retail stores. We'd love some insight into what are behind those impressive gross margins. Is it the markets where you operate? Is it your store locations that drive those strong margins? And do you expect to be able to replicate those margins going forward as you open new store locations?
I'll let Eleanor answer that, but maybe before she does, I'll say one thing. We've really looked at what to focus on early on and what the customer need state is. And there's a lot of people doing a lot of things where it's really cool to see, from a differentiated brand experience to loyal to customer programs. Can't say the word loyalty, I guess, but all the stuff that people are doing, we really are disciplining our capital allocation. And I'll let Eleanor speak to it because we really wanted to follow the customer where the need state was. It seems right now what they need is the right product in stock at the right time. So I'll pass it to Eleanor.
Yeah. Thanks, Dan. I think you hit the nail on the head. Absolutely. I think it's about competency and experience as well. Having operated in retail for so long, some retailers are margin sensitive, and so it really comes down to internal practices, how you manage at the SKU level, how you manage category growth. And I think a lot of retailers get distracted by shiny objects. We talk about that a lot, and really we're focused on customers. So our My Chiaro that we just launched, we expect to continue. I mean, 38.2 is really great, but that's great with just basic foundational, fundamental retail approach. We're really excited about expanding into other margin growth areas through better data analytics, better reporting, and other business streams.
And we look forward to seeing those come through. My next question here is on the illicit market. Continues to pose challenges to the legal cannabis market in big ways. What do you think regulators can do to support the legal cannabis industry? And are you seeing those steps being taken with a particular focus on what you're seeing in BC?
So I see, Dan, you're muted. I'm going to assume you want me to take that one.
Yeah, go ahead.
Yeah. So the regulation, yeah. So we're passionate about figuring that out, because certainly it's a challenge. And I think that there at the beginning of my experience in this industry is real need to maybe focus on shutting down unregulated sites or shops. And I think now it really comes down to provinces working with the federal government and with other agencies to ensure that that consumers have access. We recently read the story about unregulated cannabis edibles and what kind of havoc that can wreak for young people that have access to it. And I think that the government really needs to start looking at ways it can make access more accessible on the regulated side, certainly through things like last mile delivery, e-commerce. And so consumers don't get confused. And so for those that are curious about the difference, I think that that's really what we have to focus on is regulated cannabis has come a long way. It's got a little bit of ways to go in terms of product parity, but certainly it is about online and access, so delivery, e-commerce, and again, Chiaro is passionate about delivering on that competency, and we've been focused on it since day one.
Thank you for that, Eleanor. My next question here from the audience, you're a distributor of cannabis in Saskatchewan. That obviously offers unique opportunities to work with both LPs and retailers. What insights do you get from working with these upstream producers, with working with other third-party retailers, and how can you incorporate those insights into your own stores and your own retail model?
Yeah, that's a good question. I think Saskatchewan, how we viewed it from the beginning and the reason we went into the market and got into wholesale really, really early is because it's the only market you can be in to get that kind of education experience and those kind of relationships. So if you look at the wholesale opportunity in Saskatchewan, it is a small market, but what does it give you? Talking about Saskatchewan specifically, it gives you a vertical market as a retailer. So some retailers have chosen to have more than 20 or 25% and be restricted from being kind of a pure retail play across Canada. We haven't. So how do you own a vertical market like Saskatchewan? You just talked to Saskatchewan. I think you do it through wholesale. So that way, if you've seen any of our releases and went to our website and our investor website, you'll see that we have a handful of licensing deals with brands and product brands and producers. So really being able to own the license for those brands allows us to own the supply chain, own the production there. So as for Saskatchewan just itself, it is a smaller market, but very, very, again, defensible when you own wholesale and retail, because if they grow the retail footprint, traffic comes through the wholesale and vice versa. And if you can own the brands, you don't have to produce the brands. As for what it brings you, we had one slide where we showed kind of retail, wholesale, and e-commerce, so kind of omni-channel. And it's a really plug and play model. So what does it give you? It gives you those real one-on-one relationships with producers. So we have to deal with producers. It gives us a ton of data and information to crunch and to utilize for what are people wanting in that supply chain information, that real life. We're not buying it from anyone. We don't need to see it from. We have that real life supply chain data. So I think that's a huge thing. And if you look at markets that are opening up, again, in Saskatchewan, we've already had e-commerce since the inception, since we got our license. We have wholesale in Saskatchewan, we have retail in Saskatchewan, we have last mile delivery. So that competitive, omni-channel retail or multi-channel retail environment or expertise that is top of market now and moving forward in the future here, we're already able to develop that. So just having a team that is developed and competent in that will apply as markets open up, especially if you look at the US. I mean, they have their supply chain is private. So you go to wholesale distribution, it really applies. So I think between us and Fire and Flower, I'm sure they do more volume. I mean, we service more retailers, but I think that competency is just massive to have that competency in house to plug and play any market as it opens up, whether it be distribution, whether it be excise stamps federally, you name it. It's just a huge value add.
Yeah, I'm just going to add one quick comment, Andrew, sorry, but I think it's really salient to the point that Dan just made, which is, yeah, it's a small market, but we're really partnership based, whether it's retailers or LPs. And so both sides of that partnership are so valuable to us, and we really appreciate both sides of that equation.
One more thing I'll say about the craft production, just for the wholesale, it is the pathway, in my opinion, for it is a great place to incubate, new producers. So we have some good partnerships. I think we're the first ones to introduce micro products into the market through Saskatchewan, but it's a great place to incubate new brands and ideas too. And if you can have some sort of partnership or ownership of a unique brand that comes to market, I think that's huge.
Thank you. Very in-depth response. Appreciate that. My next question here, you're looking, I believe you mentioned you're looking to expand to new provinces. We would love some insights on what interests you most. I also believe during your remarks, you noted you touched upon the balance sheet and access to capital in your recent public listing. Does improved access to capital help you push into these markets at a more aggressive pace? And what should we expect over the coming year?
Well, I think Ontario is a logical choice. Biggest market in Canada. Even though we talk about BC being very defensible, it's where you build your strength, it's where you build your competency, it's where you build your team, it's where you cut your teeth, get positioned. But it's kind of where you castle, and then you go out east, in my opinion. And that's definitely where we're headed. We have a retail operator's license there, and really with the model we have now, talking about timing, team, and capital, really you're churning through now the business growth cycle. We have a model that we believe is better than our peers, even though we love the industry, the market, but we just think we have something. We've really been diligent and disciplined in building a model that makes sense. That is now when we go to scale our model across Canada, what do you need? You need cash. And then you're talking about a team that arguably has collectively ran over 200 and some stores. You're talking about even Eleanor, if I speak to her background for a second, you have a team that has a capacity to run up to with very little additions to the team, running up to 100 stores. So I would say we're arguably around 10% of our operating capacity, how many stores we can take on, even with the team we have. So you have capital, you have a model that works, and now you just need to scale it. So what do you need? An efficient market, access to capital, and opportunities. And if you look at the Ontario market, I believe Fire and Flower and High Tide both have their basket full a little bit, but it seems like the demand is coming down, the price is coming down, and supply is going up. So what an ideal next timing for Chiaro to enter a market that all those things are happening. We have a little more time to pick our locations in a market where you can kind of put stores side by side. So if that doesn't tee up for an unbelievable opportunity for where we're positioned, I don't really know what does. So I think that'd be a logical choice.
Great insights to that as well. Final question here, but before we bump up against time constraints, we'd love to get your thoughts on what are the most exciting opportunities for Chiaro in 2021 and beyond. Turn it over to you, Dan.
I'll go to Eleanor, because if it's just me, my background's computer science, formally by education and business by trade here. But so if you go to me, it's going to be tech and unmanned stores. But let's pass it to Eleanor to speak to.
Yeah, the constant debate from Eleanor and Dan. But no, I think that's what makes us a great team is, Dan brings a very tech forward approach, and I'm a big fan of omni-channel retail. I think it's the wave of the future. But what are the three things I'll say that excite us the most when we sit down as a management team? I think it's our positioning in terms of where we're at with debt and the potential to grow. That's exciting to us because we've worked so hard to have that plug and play model Dan talked about. I think it is the regulatory changes we know are on the horizon. And the final one that I'll leave everyone to think about is we're only at, and I'll turn it over to you, Dan, 7 stores. So explosive growth. We're ready to go. So we're excited about it.
Yeah, I think you nailed it. I think that's it. I think everything in retail that people are doing now, I think people got to be very conscious about the consumer state and where we're at. Even on the experience side, it's I forget who said it, but the last thing to be commoditized is the experience, and let's not waste it here. Let's follow the trend of where the consumer's at and commoditize the experience they want, and just keep following and being a partner to them. I think that's where you got to be in the market. So, and you only have limited resources. So I'd say to them on the call, up and comers here, be very cautious of where you're allocating your resources, because if you're putting a lot of allocation into branding and marketing and being that, and have no traffic to drive to monetize that, I just say be very very careful where you're allocating your resources. And I think the story this year is going to be scale and a lot of activity on the consolidation front, and hopefully Canada, after we all come together, we can take a good run at the US. I think that's where we want to. That's where we all.
Nicely said. That's well said. Yeah.
Very well said. Thank you both, Dan and Eleanor, for joining us today. A great overview of the company. Very strong castle in BC and expansion plans across the country over the coming months and years. So thank you very much for joining us.
Thanks, Andrew.
Thank you, Andrew. Thanks for having us.
And thanks everybody who joined today.
Absolutely.
Yes, thank you very much to the audience as well. It's been very engaged all conference. We really do appreciate it. So this concludes our lineup of presenters today. We plan to post a video of each presenter on Echelon Wealth Partners YouTube channel over the coming weeks. So keep an eye out on that. We would also like to extend a thank you to all of our presenters who joined us today and took time out of their day to share insights on the exciting and fast-moving Canadian retail cannabis industry. We can clearly see that momentum is behind the operations, financial performance, and the share prices of these companies. We heard from 4 of Canada's leading cannabis companies that there's a long runway for growth ahead, and we look forward to participating as that unfolds. We'd also like to thank our clients and our audience for joining us on Zoom and on the YouTube live stream today. We hope you enjoyed the presentations. That concludes today's conference. Thank you for joining us. You may now disconnect.